We are confident. As we look ahead, we see momentum in our business as we enter 2021. So those strategies that have been accelerating for us in the back half of the year, I'd say on the top line, it's categories like active, athleisure, the home business, our digital operations, those are carrying through. I think importantly, and you just spoke to it, profitability. We're seeing improvements in our gross margin. We're keeping expenses tightly controlled. And this is not about Q4. These are fundamental changes that we're making in our business. So as we model that out and look for rebounding through the pandemic and hopefully the economy opening up, the vaccines, et cetera, we are optimistic as we enter the year. I'd say especially in the back half, given the macro conditions which are expected to improve. And we have a very big initiative with Sephora that will be launching in the fall.
I was just going to ask you about Sephora. You're calling it a game changer, but Target's also adding Ulta there, and Sephora does still exist at JCPenney until 2023 when that contract rolls out. So why is it going to be a game changer for Kohl's?
Well, Courtney, I think it's a game changer for both of us, for Kohl's and Sephora. I mean, it's really about uniting two really strong brands and companies. And what we bring to Sephora is our strong omnichannel platform. 1,160 stores, 95% of which are off mall. And that was critically important for Sephora that wants to reach that customer off mall. And we expect with that convenience, with Sephora now being in their neighborhood, we're going to attract a lot of new and younger customers. I mean, for us on many levels, it's transformational. One, it will instantly turn us into a true destination for beauty. We're building a phenomenal 2,500 square foot shop. Front of the store. We'll even have branding, a dedicated door in most of our stores. We've already secured 100 of phenomenal brands, even some exclusive to Sephora. So for us, it's about transforming beauty, but importantly, the halo effect that we'll get from all these new customers and speaking to our existing customers as well.
We now know that there is a group of activist investors involved in Kohl's with a 9.5% stake. But look, at the end of the day, they want to increase shareholder value. I assume that's what you want to do, too. Outside of reconstituting the board, are their ideas really so wrong?
No, well, what I would say is that we published our strategy last October. Of course, we had been working on it for some time, and it addresses everything from top line, like I said, transforming our categories like active, getting into beauty, reigniting our women's business, and then important profitability drivers around supply chain transformation, inventory management, what we're doing on expenses, leveraging investments, frankly, we've made for the last couple of years around areas in technology and marketing and store labor. So they did come out last week publicly with a proxy fight, both with their ideas as well as nominating 9 directors. And as I examine those ideas, there's a lot that actually is reflective in the plan that we've been working on, and that we're actually already seeing proof points and momentum. But to your point, I think we share the alignment that this is about creating value for all shareholders. And that's what my intention is. And I wake up every day saying, how can we grow our business, grow it profitably, and create value for our shareholders?